Today we will look into the amortization.
Uh, Sorry, which module?
Yeah, amortization process. Okay.
Okay.
Uh, where we can create.
One thing uh,
Sorry.
like I wanted to check about inventory items. Is it possible to have inventory of like let's say different combinations, like let's say if it's a garment shop, uh, um, like small, medium, large, with different pricing, something like that. Is it possible to have different inventory items? Um,
The same item but different.
yeah,
Okay.
same different parameters, um, and so different pricing as well.
Okay. So like there are two ways to do it. Okay. So like your question is the SKU is one, but that SKU is available in different sizes like
Yes.
that.
Yeah, like different sizes. And so not only different sizes, like sometimes, like it's the same, the base model is the same, but the features are different. And because of that, the pricing would be different.
Okay. So in that case, what can be done? We can create an item. Okay, a main item with certain, let's say a unique SKU. Okay,
Mhm. Okay.
then under that we can create sub item of that.
Oh, so you create a main item and then you create a sub item?
Yes, yes. Let's say I create a item. Okay,
Yeah,
after saving that, when we I create the another item, I will select the first one in sub item of.
I see. Okay. Okay.
Okay.
Hmm.
Like example is given there with LG refrigerator and under refrigerator. Okay.
Yes.
Hmm. So we can create that. We can do
Oh,
that.
Oh, and the sub-item can have different prices, right? Different pricing?
Yes, absolutely.
Okay, okay. I see. Okay.
Okay.
Okay. Yeah. Thanks.
Okay, now, so amortization is a method, okay, basically.
Hmm. Okay.
Amortization term used in the accounting when we like paid something in advance. Okay, basically
Okay.
a sum of the amounts. Okay,
Hmm.
so in the accounting terminology, let's say uh, I have paid to my vendor something today, but
Mhm.
that expense is related to the next 6 months.
Okay.
Okay.
Hmm.
So what will we do? We will not uh, book the expense directly in like in the month of March. Okay.
Hmm.
We will book in some other account. Then on the month by month basis, it will be moved
Okay.
to the expense account.
Okay.
Okay. So
Hmm.
for that, we have to create a amortization template and we have to set up something. So let's see the amortization setup as of now.
Okay.
Okay. So we will go to the list, accounting, amortization template,
Hmm.
new.
Hmm.
We can create our own amortization template and
Okay.
Mm. Let's say test.
Mm-hmm.
So type is standard or variable. Okay, what does say standard or variable means? Okay. It means that basically
Mm-hmm.
when I select the standard, I will get the some methods. Okay, method
Okay.
of calculation. But if I
Yeah.
select the variable,
Oh,
all
that's not
these
a.
fields get disabled and I have to define the percentage here. Okay,
Oh, okay. Okay.
okay. So
Mm-hmm.
generally we use the standard only.
Okay.
Okay. Now what are the methods? There are four methods of calculation.
Mm-hmm.
Uh, we will be doing one only, which is the most commonly used, but I will explain about uh, all four. Okay.
Okay.
So first is straight line by even period. Uh,
Mm-hmm.
so this straight line by even period means, for example, I have purchased an insurance which
Mm-hmm.
is starting from 16 March
Mm-hmm.
24 to 15 March 25.
Yeah.
Okay.
Mm-hmm.
So this is my complete 1 year.
Mm-hmm.
But if my method is this straight line by even period,
Mm-hmm.
so from March to March, okay, how many like total number of months how it is coming? If we calculate, uh, there are 13 months. Okay, 16
Yeah.
days of March and 15 days of March 25. So total
Mm-hmm.
becomes, if we calculate the only the month in which it is showing. Okay. So it becomes a
Okay.
13 months. So what happens is under the like straight line by even period method,
Mm-hmm.
system will calculate this as 13 months and whatever will be the amount divided by 13.
Oh, okay. Okay.
Okay. Hmm.
Mm-hmm.
Let's say my if my insurance amount is 65,
Mm-hmm.
so system will not divide by 12. Okay. Ideally it's 1 year only. Okay. So system
Right.
will not divided by 12. It will basically
Divide by 13.
by 30. It will count
Okay.
as, it will show the expense for the 13 months.
Okay.
Okay. Under this method, if this 16 days is not going to be prorated, okay,
Okay. Mm-hmm.
it is being seen as one period only, one complete period, and
Mm-hmm.
equally distributed.
Okay.
Okay. Hmm.
Mm-hmm.
Now, this was the set line by even period. You got it now?
Yes. Yes.
Yes.
Yeah.
Okay. Now, second method, set line prorate first and last period.
Okay. Mm-hmm.
So, mm, now, what happen will in this particular method, second one? Okay,
Mm-hmm.
let me check if I can get this. So there are 364 days,
Mm-hmm.
okay, in total.
Mm-hmm.
So, what happened? to get the 1 day value.
Oh, so you divided that by 364?
Yes, this is the 1 day value.
Oh, okay.
Okay.
Mm-hmm.
Now this 1 day value will be uh, like this 16 days divided by 47,
Mm-hmm.
15 days of 575. Okay. So
Mm-hmm.
March 24 and 25.
Mm-hmm.
So we get this. So what will NetSuite do? NetSuite basically calculate this prorated values first. Okay.
Okay.
March 24 and March
Mm-hmm.
25.
Yeah.
Yeah. And then what will happen? Uh, NetSuite will calculate the balance value, which is 65 minus this.
Okay.
We get the balance 59464.
Mm-hmm.
Okay. And this
Yeah.
balance value will be subtracted between the balance month. Sorry,
Okay.
will be distributed equally in the balance months, which is
Oh, in the
April
balance.
24, which is
So all
April
the
20. Yes,
right for all the rest of the 10 months, right?
yes. Like for from April 24 to the Feb 25,
Mm-hmm.
it will have uh, equal value.
Yeah. Yeah. Sure.
So in each month, this value will come.
Mm-hmm.
Okay.
Okay. Yeah.
So there was one method. Okay, now straight line prorate first and last period rate.
Mhm. Yeah.
Okay.
Using exact days is the next one.
So this another method is flow rate, period rate. Okay, so now what uh, under this period rate, it
Mm-hmm.
will do like it will have the same method as like this second one only, but little bit change is related to
Mm-hmm.
the uh, period which should go to
Okay.
period of
Mm-hmm.
um, okay, we'll get back to you the exact calculation for this method. Okay.
Okay.
I'm just getting confused in one of the uh,
Mm-hmm.
method here. Okay. So now we will see the straight line using exact base.
Okay.
And we will do testing on the basis of this. So straight line using exact base is very simple. Okay.
Mm-hmm.
Uh, it will prorate each period.
Okay. Okay.
Okay.
Mm-hmm.
Like for the same example, this 16 March to March 1525.
Mm-hmm.
So 1 day value will be calculated 178. Okay.
Right. Right.
And each each month it will be multiplied by the number of days in a particular month.
Number of days of that month. Yeah. Okay.
Yeah, yeah. Like like for the April, it will be 30 days. For May 31. For March
Mm-hmm.
16 days. So straight
Okay.
line using exact days.
Okay. Okay. Yeah. So this amortization is just like you mean it's used with the assets, right? Like is that what's the purpose of this exactly?
Yeah, so amortization purpose is again like so. For example, I am buying a insurance. Okay,
Mm-hmm.
let's an insurance like employees medical insurance or office insurance. Now my
Right.
insurance period is 1 year.
Right.
Okay, but I
Mm-hmm.
am making a full payment in this month
Mm-hmm.
only.
Okay. Okay.
Okay, so if that particular amount, let's say amount of uh, $1 million and something any substantial amount. Okay,
Mm-hmm.
if I book directly into my expense account in the month
Mm-hmm.
of March, okay,
Yeah.
so
Mhm.
it will go to my profit and loss directly.
Oh, okay. I see.
Okay,
Mm-hmm.
but ideally my expense is related to the future coming 1 year, not particularly for this month,
Right. Right. True.
right? So,
Mm-hmm.
so what we do, we book that amount instead of the P&L account, we book in the balance sheet account.
I see. Okay. Okay.
Okay,
Okay. Mm-hmm.
and each and each month we uh, like transfer that amount from balance sheet to the income and expense, basically expense account from the into the P&L. Okay,
Mm-hmm. Okay. Okay.
so it will show my true financial statements for a particular period.
Okay. Okay. Okay.
So
I
same
see.
concept, yeah. So same concept works in the revenue side also, but in
Mm-hmm.
revenue side we say deferred revenue. Okay, here
Okay.
we are saying amortization, or we can say deferred expense process
Mm-hmm.
or prepaid expenses process.
Yeah.
And if the same like comes in the uh, revenue side, we will say the deferred revenue.
Deferred revenue. Okay.
Yeah.
Okay.
Okay. So
Yeah.
deferred
Yeah.
revenue is also a balance sheet account.
Okay. Okay.
Okay. Yeah.
All right. Okay.
So straight line using exact days is like each days will be like according to days it will be shown according to number
Okay.
of days.
Okay.
Okay.
According to,
So
yeah, depending on the
yeah,
method. Yeah.
yeah, and I also like remember the period rate also now.
Mm-hmm.
So what happens in the period rate uh, from 16 March to 15 March, we know this is a complete 1 year.
Mm-hmm.
Okay,
Yeah.
we know it like it's complete 1 year, is complete 12 months,
Right.
right? So what will happen? It will be divided into 12.
Mm-hmm.
Okay,
Mm-hmm.
and mm, this particular first and period will simplify. Yeah. So this particular
Mm-hmm.
16 March and 15 March will be prorated on this basis
Okay.
or on this amount, and the
Okay.
rest of the months will show this 5.16.
Oh, same. Okay. Okay.
Okay.
Mm-hmm.
So difference between this method and this method is that we are dividing the amount first equally, then prorated. But in above method, we are prorating first and then divided the balance equal into the equal
Oh,
ones.
okay. The whole balance into equal ones.
Yes.
Yeah. 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 Okay. Yeah.
Now we will do some testing on this uh, statement using exact days. Okay.
Mm-hmm.
So term source is the what will be the start date of this amortization. Okay. So we have to
Mm-hmm.
source from the transaction. We will enter a
Okay.
date in the transaction and we will source it from here. There.
Okay. Mm-hmm.
Okay.
Yeah.
And which is the deferral account? It will be a default. We'll let you know about the deferral account in the
Mm-hmm.
uh, like item only when we create item. Okay. So
Yeah.
deferral account will be default. This will be blank. Target account will be default. We don't have to fill any details here. Okay.
Mm-hmm.
Just keep it like that and just save. Okay. We will go
Okay.
to a list, accounting, item, a new item we will create. Okay, we will create a service or purchase item.
Mm-hmm.
Item number 2003. Item. We'll go to accounting.
Mm-hmm.
Okay, first we will select the expense account here. And under the deferred expense, you will select the
Mm-hmm.
say,
Yeah.
we will enter a vendor bill. Okay, what's the vendor name we have created under this Nova Sportiva? Let me check. Do you remember some creating some vendors?
Um, good. I don't remember. Uh, yeah, I think I have something there.
Purple or consulting?
Hmm.
Now we go to item. Let's
Mm-hmm.
get Demo 003 insurance fees.
Yeah.
Let's say 400 Canadian dollar. That's for this. So here we will select that
Mm-hmm.
template, okay,
Yeah.
which we have created.
Mm-hmm.
This is
Yeah.
S27 March, okay.
Mm-hmm.
We will select the start date and end date. Amortization start date, what will be the amortization start date?
Yeah.
Okay. Mhm.
Mm-hmm.
We'll take this only 27. Okay. Let's say 26, only 26 March.
Okay.
Okay. Now do 6 months, which is 25th of September.
Mm-hmm.
Okay. So we will save that. So we have to, it is mandatory to, if we know that for this particular expense, we are
Yeah.
paying in advance. We are paying in advance. So we will uh, like tag a template which we want to use
Mm-hmm.
and we will mention the start date and end.
Okay. Yeah.
Okay. Now
Mm-hmm.
save here. Oh, you have selected a vendor credit limit. It got saved on 400 only. Okay.
Mm-hmm. Okay.
So now what I get a schedule link. Okay.
Mm.
So what
Okay.
is amortization schedule? Amortization schedule is a report in which I can see that how my expense for particular uh, transaction is going to be distributed. Okay.
Oh, okay.
Before
Mm-hmm.
before going to the that schedule, we will check the
Mm-hmm.
GL impact. Okay.
Yeah.
So if you can see into the GL impact, this
Mm-hmm.
amount goes into this prepaid assurance instead of the
Mm.
expense account.
Yeah, instead of the expense account, yeah. Goes to
Yeah.
prepared
Okay. So
expense.
this prepaid insurance is a balance sheet account, which is
Mm-hmm.
part of the other current asset.
Oh, okay. Okay.
Okay.
Mm-hmm.
Other current asset. Now we will go to this schedule. Okay. So this is my schedule.
Oh, so it's given you the full schedule. Mhm.
Yeah. So for March, 13.04 will be recognized. For April, it
Mhm.
will this, May this, June this. So each
Yeah.
period,
Mm-hmm.
the amount which we will going to recognize in this particular account. This is the expense account. Okay.
Expense account, yeah.
So we will have like that.
Hmm. Okay.
Okay. Now, as you can see, it is showing status not started,
Hmm.
uh, remaining deferred balance, total amortized amount. So
Yeah.
basically, this schedule we haven't yet started yet. Okay. So
Okay.
how, see, we schedule is created, but how this particular amount will go into the expense account.
Mm-hmm.
Okay. So we have to create the journal entries.
Okay.
Okay.
Okay. Mm-hmm.
We will not create the normal journal entry. There is a different transaction for that. We will work on that. Okay.
Okay. Mm-hmm.
Okay. So transaction financial create amortization journal entry.
Mm-hmm.
Okay.
Mm-hmm.
So once I will go to the amortization journal entry, my period is March 2024.
Mm-hmm.
Okay, we'll select UK Canada.
Mm-hmm.
So as you can see, we are getting this entry.
Yeah.
Yeah,
Okay.
okay. So what happened basically, like all the schedules, all the transaction will come one by one, and
Mm-hmm.
during the month end, we will have to select this and create journal entry.
Mm-hmm.
Okay. So
Mm-hmm.
so my journal entry date will be the 31st of March, posting period will be the March only, and
Mm-hmm.
we will just create this journal entries.
Okay.
So it is going to be created,
Mm-hmm.
refresh, it is complete. Now, so this is my journal.
Okay.
Okay. If I go and open this, okay. So you,
That's a journal entry from the operating expense to the
yes,
previous one, right?
yes. So basically from prepaid, the amount is being expensed off.
Mm-hmm. Okay. Okay.
Okay.
Mm-hmm.
So my expense is booked now. So you can getting this amortization destination, amortization source.
Oh, okay. Okay. So
Okay.
every month you have to come and do it here, right? Like it
Yes.
doesn't
Every
do
month we have
automatically.
to do. Yes.
Mm-hmm.
Every month we have to do. And
Mm-hmm.
if the and we can set up the reminder also in our mm, dashboard for that. Okay.
Mm-hmm. Okay.
Mm, this is the reminder option.
Mm-hmm.
We will drag this to above. So set up like amortization and spending.
Mm-hmm.
Okay. Save. So once there will be any amortization entry pending, it will show there. Okay.
Okay. The reminders, yeah.
So when there will be any like reminder, it will show there.
Okay.
Okay. Now if I check, if I go back to the schedule, amortization schedule, okay.
Mm-hmm.
So we have just created the journal entry. So schedule number is 12. This is our schedule. So now you can see that status is in progress.
Mm-hmm.
Total amortized is 13.04. Remaining is this. And we get that this is date created. Okay. We also
Oh,
get the journal entry link in this schedule.
okay. Yeah. Okay. Yeah.
Okay. So this was the amortization method, basically process. Uh, Now there is one more thing into that. Okay.
Mm-hmm.
For example, okay, my this started. Okay,
Mm-hmm.
is going is this is started from the January. Okay, we are in the March, but it
Mm-hmm.
started from Jan 24. But we are
Mm-hmm.
booking the bull bill vendor invoice in the like books of account in the month
Yeah.
of March. Okay, yeah.
Mm-hmm.
So we will enter the date. Let's say I am entering the date of 1st of January 2024. Okay,
Mm-hmm. Yeah.
and it is for the uh, like 6 months, 30th of June 24. Now,
Okay.
so what will happen in my schedule? In my schedule, uh, my schedule will show the amount from 1st of sorry Jan, Feb also. Okay,
Mm-hmm.
let's do a case only. Just we'll make a copy.
Okay.
Save.
Mm-hmm. Oh.
Okay, now my schedule is showing that in the
Mm-hmm.
Jan month, this amount should be expense of, and in the Feb
Yeah.
63.74. But we are sitting
Mhm.
in the March and
Right.
period of Jan and Feb are low. So
Right.
how we will post this entries in Jan and Feb for? Okay.
Mm-hmm.
So we are
Mm-hmm.
not going to post in Jan 24 and Feb 24. It will be
Mm-hmm.
posted in the March only, but it will be
Yeah.
posted for 3 months.
Oh, for 3 months. Okay. Okay.
Yeah.
So
Okay.
you
So
can predict it, right? Like so,
yeah.
even though you're
So how
pre.
we will select uh, the three entries there? We will go to the amortization journal entry.
Mm-hmm.
Okay. So now only one is coming. This
Right.
March. Okay. Only March is coming. So how other two will come? We will select include prior period.
Oh, okay. Mm-hmm.
Okay. As
Yeah.
soon as we have selected the prior period, we get this. Okay. This
Okay.
Jan, Feb, March.
Okay.
Okay. So we'll
Mm-hmm.
select this and create journal entries.
Mm-hmm.
So, so journal is created
Yeah.
and okay, we get the entry like this.
Mm-hmm. Right.
right?
Yeah.
So this was the amortization my, schedule and process. So you can test it on your own. Maybe you can, if you want to test, you can test all the methods there. Okay.
Okay. Mm-hmm. Okay. Yeah.
Any questions in this particular process?
No, I think it's pretty okay.
Okay.
Yeah.
Now we will
Mm-hmm.
check the reports related to this method. The report which we get from the system are like, I will not say it's pretty much useful. Anyway, we
Mm-hmm.
have to create our own report. Okay. But
Mm-hmm.
let's see the report also.
Okay.
Okay. So we'll go to financial and we get two reports here, amortization forecast.
Mm-hmm.
Another is the advertised capitalized expense. Okay.
Yeah.
So let's see. VK Canada, refresh. So this is my report. Okay.
Mm-hmm.
It is showing that how much is amortized. Okay.
Yeah. For the period of March, right?
Yes. Hmm.
As of March. Yeah. So it doesn't show the prior month.
Sorry.
It doesn't show the prior month, like the January and February months too.
No, it's short na. Okay. So the prior one which we have posted, it was complete $200.
Oh, okay, okay. It was $200.
Okay.
Mm-hmm.
It was complete $200 for Jan, Feb, March.
Oh, okay, okay, okay. Okay.
Okay.
Yeah.
So it is showing that amortized is 200, deferred is 200. Total is
Mm-hmm.
400. In the first
Right.
one, we have posted only for $13,
Mm. Right, right.
and it is still pending.
Oh, okay. Okay.
Okay.
Mm-hmm.
Now, if I check the other report, so it is showing that for the future, for
Mm-hmm.
from September to this, this is the forecast. Okay.
Yeah.
But like main challenge of this report is the main, like you can say, limitation which every customer wants, and
Mm-hmm.
especially the Indian customers. Okay.
Mm-hmm.
Uh, See, we are getting the amount. Okay, like from till September, this amount
Mm-hmm.
is going to be forecasted. Okay.
Right, right.
If I change the month to the July, let's say, and I will refresh that. So I'm getting 265 till July, 200
Mm-hmm.
till July. But in which month, how much? Okay.
Right, right. Mm-hmm.
Like how much will be the April 24, May 24, June 24, or July 24?
Mm-hmm.
Okay, so this is something it is like customer wants in that format only,
Right, right.
right?
Okay.
And for that we have to create our own say search or we have to create customized report.
Oh, okay. Yeah, save search.
Okay.
Yeah.
So
Mm-hmm.
there are two reports for this, but they are not pretty much useful for the business. Anyway,
Mm-hmm.
we have to create a safe search or we have to go customize and do something in that.
So when you click on customize, it allows you to customize here.
Yes. So basically
Oh. Mhm. Mm.
Uh, Being a functional consultant in Nets, what like when we use the term customization, okay,
Mm-hmm. Mm.
it is more importantly used in that way, like there is not something available uh,
Right. Mm-hmm.
in the standard, and we have to do some scripting, coding, or some extra activity, okay, and
Customization. Yeah.
that's
Mhm.
customization, okay. But
Right.
this, okay, so this is the like this customization is not actually a uh, customization, okay. So there is a
Mhm.
button like we can design our own report.
You can add some extra fields and all that.
Yes, correct, correct. We can't,
Okay.
okay, we can't do which is something is not available uh,
Mm.
like in this particular
Right,
fields.
right.
Okay.
Yeah.
Let's
Okay.
say I want to show month by month, and
Mhm.
but there is no logic in this particular report, so I can't do that. What I
Right,
can
right.
do, I can add the fields, okay,
Mm-hmm.
or I can add my filters there
Mm.
if I want to
Okay.
report the filter. So,
Yeah.
so this is the basically report designing, you can say.
Mm-hmm. Okay.
Like I am getting this amount, uh, start date and date. Okay. Maybe we can check
Mm-hmm.
if we get any amount related to month, but I doubt that. Okay. No, we are not done. Okay.
Yeah. Okay.
Yeah. So these are the two reports in the
Okay.
NetSuite. Okay.
Okay.
So that's it for today.